big question, and really this bounce that we've seen in the market today started in terms of the US stock market, and the question on everyone's lips is, are we seeing a dead cat bounce on the Nasdaq, or is this going to be a sustainable rise? So it's still looking towards the US to give us a lead, and of course earnings season in the US kicked off last night with Alcoa, the first one off the boats, and we did see it impressing. So alumina doing well on the market today. Our market, a very impressive performance. We managed to hit the highest level that we've seen since 2008. So 5,477 points was the high that we reached on the market. And there was so much information to absorb. First of all, the retail sector, the standout space, the consumer discretionary sector up by 2.1%. That takeover offer for David Jones also lifted retailers and implied valuations for retailers as well. We saw Kathmandu up by 4.5%, Maya gaining 4.4%. We also saw a rebound in those high momentum, high growth stocks that have been sold off so badly this past week. We saw Freelancer up by 6.4%. We also saw Zero up by 2.6%, and we also saw REA Group gaining 3.7%. So that was nice to see. And then on the economic news front, housing finance impressing. We saw a rise of 2.3% in February, and that of course helped the Aussie dollar. We saw the Aussie dollar reaching 5-month highs, and that's been one of the things behind the rise that we've seen in commodity prices as well. That lower US dollar seeing commodity prices surge. Iron ore in particular doing well, and that's due to the mini stimulus announced from China. And if we have a look at that mini stimulus, a big part of that is building railroads. And if you're building railways, well, you're going to use iron ore. So iron ore prices have jumped 15% from the lows that we've seen in March. So all in all, fantastic day for the Aussie share market, a fantastic session for the retailers, and nice to see some volumes back as well.
Well, I'd like to add to that. What we're seeing, without a doubt...
John has a really good point. What we're looking at is the US stimulus and quantitative easing unwinding, and instead we're talking about stimulus in other parts of the world. And the three key areas that we're watching are China, Japan with a possible doubling of its ETF program that the market's been speculating about, and thirdly the Eurozone and speculation around a 1 trillion euro bond buying program. And they're the three areas that if we do see stimulus come through, then we will see a lift in terms of risk assets in those areas. So I think that's seeing a shift of capital as well, and a shift in terms of views. Of course, tomorrow is going to be a big day in China where we do see those trade numbers out, and that's going to be important to give us a little bit of insight into what's happening in terms of the Chinese economy. We know that the numbers out of China have been quite lackluster in the first 3 months of the year. So just looking at those trade numbers, and it was encouraging to see South Korea's trade numbers today, where we actually saw exports up by more than 5%. So hopefully that's a sign of things to come when we see the China numbers tomorrow.
Absolutely. Look, I want to get into obviously the big corporate story of the day, Julia. David Jones, speaking to the chairman a little bit earlier today, he was cock-a-hoot about the $4 share, saying it was very, very clean. The fact it was a pure cash bid offer. Your thoughts on the offer by Woolworths? Of course, South Africa's Woolworths, not the very well-known Woolworths here.
I mean, if you're a David Jones shareholder, you'd have to be very happy today with that $4 cash offer. Just having a look at the multiples of some of the other department stores that have sold throughout the last couple of years. We saw Neiman Marcus over in the US selling for 10 times EBITDA, Saks Fifth Avenue selling for 11 times EBITDA. That $4 cash offer represents 10.6 times the 2014 forecast EBITDA of $202 million. So a very nice multiple there, given that the Australian retailers have been lagging behind their international counterparts. If we have a look at the possibility of Maya coming through, I think that's now dead in the water. Since the 31st of January, when David Jones first announced to the market that Maya had made a bid at 1.06 shares, we've seen David Jones shares rising 7% as of the close yesterday, whereas Maya shares actually down by 9%. But Maya today receiving an uplift just because of the implied valuation of the David Jones offer going across the whole retailing sector. And if you own David Jones shares, you'd have to have a huge smile on your face today.
Michael,